Welcome back to the channel, my friends. In this video, we're going to talk about the difference between personal loans and personal lines of credit. I'm going to give you everything that you need to differentiate between the two and understand what they are, and obviously make the decision on what you want to go and get. Let's dive into it. Personal line of credit and personal loan are constantly intertwined, misunderstood, and hearing them brought up in the same conversation. So let's just do it all together, right? So first off, what is a personal loan? A personal loan is a set termed installment loan that you get. So you get to pick out the amount of months that you want to pay it back, and that is anywhere between, I don't know, $3,000 to most of them cap off at like $40,000, even though you can get higher. We have fintech options for this, we have bank options for this, everything in between, right? And so that is a set termed limit loan, and it has sometimes closing costs, it has additional fees that are included to get that loan executed on, right? Personal line of credit is different. Personal line of credit is an open-ended, dynamic line of credit that you have access to. So there is, for the most part, no set terms. For example, BECU has a 30-year, essentially, maturity date on that personal line of credit, meaning that it'll stay open for 30 years. Unless something dramatic changes with the bank or obviously with your credit profile or something like that, you can assume that it'll last and stay open pretty much, quote unquote, forever. And this is a lot of banks, okay? Personal lines of credits are usually offered by credit unions, not really a national bank thing, that credit product that you'll see offered. And like I said, it's dynamic. So we're only paying interest off of the balance that we're carrying. And once we pay off that balance, the entire line is once again available. So it replenishes itself as we continue to use it. I think this type of vehicle is much more dynamic and powerful for a small business, entrepreneur, a side hustle, just getting started type of business. Even those that are doing renovations and stuff for their house, I think these loans are a little bit better in my eyes. Now, just to clarify, you can get multiple personal lines of credit, you can get multiple personal loans, all in one app spree. They're all gonna show up as installment loans, okay? So now let's talk about the key pieces to each one. So personal line of credit, the benefits really are usually low variable rates. You want to keep an eye on this though. You're obviously only going to pay interest on what you're using. Like I said, as you repay the principal, the balance goes up and you're able to have access to all of that again. Another big thing is usually you'll have access to the personal line of credit in the same area as your checking, savings, different accounts like that. Whereas a personal loan, not really the same. And again, if we're getting that through a third-party fintech, then that's a completely separate login that you have to manage and deal with. But most banks will keep personal loan underwriting, credit card underwriting completely different. And not a lot of times those two products are accessible or showing in the same area of even your banking apps. The last thing, and probably the biggest thing with personal lines of credit, is that they are a more credit union centric product, right? And a lot of times you can go in and get the personal line of credit at the same time that you're getting a credit card. Now, through 2023, 2024, there was a ton of credit unions that we were finding that would allow you to, on just one hard pull and no membership, get personal line of credit, get a credit card, and sometimes even additional loans, right? Because you would kind of pre-qual and then either go in and get all these loans at once, or we would go in with or without membership and get these loans all at once. And so it was a beautiful thing. Now, obviously with the interest rate environment that it is right now, that has changed dramatically, but I still think that it packs a powerful 1-2 punch to go and get a credit card and a personal line of credit at once. Understand that most credit unions now are not just doing one hard pull for that. Each credit product will have its own hard pull, but I still think it's insanely valuable to get those two at the same time, and it really supercharges the credit card, because a lot of times we're getting 15, 20K on a personal line of credit, and we're only getting 10K, 15K on a credit card. So together, it's actually making that more of a viable part of our app spree and something worthwhile versus just getting the credit card or the personal line of credit on its own. So I still think it's powerful to get both at the same time. If you are going to go through the, let's call it the hassle of getting membership at a credit union and starting to do deposits and transactional history, blah, 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 all of that, I think it's worth it to try and get both, right? Okay, so things to pay attention to on personal lines of credit, and then we'll jump into personal loans, is watch out for your maturity date. Make sure you understand what's going on there. Read the terms, make sure you're understanding the APR, and then payments are usually 2 to 5% of the balance plus interest. Personal loans. Now, this is where things change a little bit, because most personal loans will allow you to go through a pre-qual and a soft pull process without pulling your credit. And then if you go through and accept the offer and get your final terms, get your final amount in terms of what you're gonna get, then they'll hard pull your credit. Like 99.99% of personal loans are that way. That is something that I feel is a big draw, or a big reason why a lot of times people will pick a personal loan over a personal line of credit, is because first off, they don't really know that the lines of credit are even being offered. And it's so easy. It's such a low barrier of entry to go through the process. Well, I already started it. Oh, they're going to give me 30. Oh, they're going to give me 40. And then, or to finalize the transaction and actually get the loan. I don't trust the pre-quals with personal loans, and you don't know what additional information that they're going to ask for. Expect them to ask for additional proof of income, W-2s or pay stubs or something to prove that you make the money. And sometimes if they don't like what they're seeing when they actually do pull credit, if there's a discrepancy between what they're getting and then what the report says, like in terms of points or credit range, then they might ask for collateral or something dramatically might change once it actually gets pushed to underwriting. That's why you don't really want to trust the pre-qual process that much. It's just an indicator of your odds. That's it, okay? Other things to keep in mind, probably the biggest point that I see brought up with personal loans is what reason do you put down for the loan, right? We've got debt consolidation. Sometimes they call it credit card consolidation or essentially just debt consolidation in general. That, if we're going to pick an option like that, they will want you to, on like the next steps or the next pages of the process, they will want you to fill in cards that you're going to pay down with that, because you told them that you're going to specifically use that loan for this purpose. They're going to hold you to it. And this is true for auto loans. You got to show a bill of sale sometimes, and different loans that are categorized to a specific thing. Don't be surprised if they then ask for proof of that thing. That's why the best option that you could pick, if you're not sure how you want to allocate this money yet, or you want to cash this out and use it for something completely different, then a major purchase would be the reason that you select. And we've had a ton of people go through the community and do this and have success with it. Now there are little backdoors and things that people have brought up over the years. I'll give you an example. Lightstream, for example, for a long time through their old underwriting was allowing you to get a auto loan that was purchased through a private seller, and sometimes they asked for a bill of sale within 90 days, which you had to provide, and sometimes they didn't. I heard more times that they didn't than they did. And so what that would allow you to do is because an auto loan, personal loan will be a much lower APR or a much lower interest rate, you could get that locked in and then go and spend it on really whatever you wanted. I don't think that's necessarily true anymore, but up until essentially last year, there's a lot of people still doing that. It's going to depend on your morals and values if you want to do something like that. But getting a loan for one purpose and then changing your mind, that's not a uncommon thing. That is actually pretty common. Or you realize that you got approved for more than you thought you were going to get approved for, and now you kind of change your mind. That's all pretty common stuff. But just understand that if we're going to get specific in terms of what we're saying we're going to allocate this loan for, don't be surprised if they're going to ask for proof of that thing. Okay, so just keep that in mind, and that is definitely personal loan centric, okay? I already told you most personal loans are a soft pull all the way through until the end, until you accept it, and then the pre-quals, we talked about that. So, okay, let's talk about the main reasons for denial on a personal loan. They're kind of like what you would expect on a credit card, okay? Things like too many recent personal loans or new credit accounts matter. Like if you put this at the end of your app spree, then depending on where you're trying to get it at, I would suggest to do a fintech at the end. You might run into issues to where now they're seeing the other 2, 5, 10 new accounts showing up on your credit report, wondering why we're trying to get an 11th, wondering why we're trying to get a personal loan. I've seen people sandwich personal loans in the beginning of an app spree and at the end, sprinkle some personal lines of credit in between. It's really up to you, right? But just to be crystal clear, you can get multiple personal loans in one single app spree. So yes, that is possible. And you can get multiple personal lines of credit and multiple personal loans all in the same app spree. Okay, back to it. Low credit scores are going to be another reason. If you're in the okay to bad credit range, then that might be a straight up reason for denial, or they're going to want collateral of some sort. You got to put up your car, something like that. I think One Main Financial does that, and a few others offer that. But they're going to pretty much tell you that if early on they're seeing that you're below a 685, they're going to probably start to ask for something like that, okay? Utilization is too high. If we're sitting at 60, 70, 80% utilization and we've been sitting there for months and months and months, again, don't expect to get too many offers for personal loans. Comparable credit also plays a role, right? If we don't have any high limit cards or any high limit debt on our profile, it's gonna be harder for them to want to extend us credit and extend us this debt vehicle essentially, okay? Not building relationships would be another one. And this is very important at credit unions, but way less important at national banks. Because again, they offer the pre-qual tool. That's given us a pretty good indicator of what's going on. But yeah, those are the reasons for denial. Okay, so that's it. Let me know in the comment section what I might have missed, what your thoughts are, and obviously what your favorite is. Are you a personal loan person or are you a personal line of credit guy? Okay, let me know in the comments below. And while you're here on the channel, take a couple of minutes and watch some more videos on the channel. It really does help out. You commenting and just saying anything really helps out. Subscribing, liking the video, sharing it with a friend, all of these silly things help the algorithms and help serve us up to more people to grow our audience, hopefully help them, on the direction and on their path to more credit funding. Thank you so much for watching. We'll catch you in the next one.